our stock of the day, which is Wistech Global. So it is holding its AGM. Now, the company is standing by its revenue and earnings guidance, saying it's also on track to exceed its cost reduction run rate target of between $20 and $30 million over FY22. But shares are down. It is the worst performer, in fact, at 12 p.m., roundabout there in Sydney on this Friday afternoon. Comes, though, after a pretty good month. Shares have been up significantly, gaining 64% on its August low. So let's take a bit of a pulse check on how my guests are feeling about Wistech Global now. Adam, to my earlier point, we're seeing selling in Wistech Global when it seems like a good update coming from the company. So is this again an instant of a company being sort of priced to perfection?
Well, yeah, certainly you can see from that chart that certainly August they had a pretty good run as well on the back of some, I guess, a good announcement and sort of profits for the full year. But certainly looking at the business today, as you say, the revenue line looking pretty good, 18 to 25% growth forecast. So everything looks pretty good. But with a growth style company, you can't miss on anything. They did say there's some foreign exchange headwinds of around about sort of 10%, or sorry, not 10%, $10 million worth of revenue, some forecasts, some headwinds there. But really at the end of the day, like, I think this one's had a really good run. We have started to see some of these tech names getting sold off on the back of, what's happening with inflation, interest rate rises, those kinds of things. So this might be just a little bit of a condition for people at the moment. But overall, I think it looks like a good AGM result. They've definitely reiterated guidance, and that gives us a little bit of confidence. Now, the next question you're going to ask me is this a buy, hold, or sell? I think this is certainly a hold. The only the reason because I think that inflation issue going forward is going to struggle a little bit with that with those higher inflation numbers. So I'd just be a little bit cautious up here at the moment.
So Adam knows the rules of the program. It's a buy, it's a hold, or it's a sell. We get to the reasoning behind it. And when it comes to the ausbiz portfolio, a company needs to get 2 buys on the day from both guests to go in. And I'll update you on that portfolio a little bit later in the program. Both of these guys have had a hand in building it. Carl, back to Wistech Global. You can talk fundamentally, but you can also tell us what the charts are telling us about the momentum behind this name.
Well, yeah, I mean, up to today or before today, I would have given this a 10 out of 10 on the charts, Nadine. I mean, it is perfect. If viewers want to know what a 10 out of 10 chart looks like, go grab Wistech, print it out and stick it on the wall. And when you see that chart, you don't ask questions, you just run out and buy. Today's price action is knocking a 0.1 off that 10 out of 10. So it's still a 9.9 out of 10, but I still think it looks very, very strong on the technicals. Something that we don't experience as much over here, but it's really prevalent if you look at US stocks, is that they report obviously quarterly. So when they have a great quarterly announcement, you get these big jumps, like these huge gaps on the charts. And it's almost like clockwork. If they hold that jump, if they don't trade back into that gap, you can almost guarantee it's going to go higher. And it's very similar, I think, for this Wistech. That announcement in August, their full year 21 results did surprise the market. And there was probably an element of short sellers in there as well. I mean, that's the rumor going around. Having said that, I can't understand why you would have been short selling it, because it was 10 out of 10 before that announcement anyway. So short sellers, if you're out there, learn how to read a chart. Today's price action, I think, is a blip. I think, look, the market was expecting an upgrade to guidance. We got reaffirmed guidance. So I think there's a little bit of a gap there in terms of what the market wanted and what the market got. But I think the underlying story is still the same, and that is one of exceptional growth for a company that, let's face it, is hitting its bull market right now. These guys do supply chain solutions. So, bringing your supply chain into the modern age with, cloud data, up-to-date, tracking of your anything you're trying to get around from point A to point B. So this supply chain issue that the world's experiencing, we're at the beginning of this. We're not at the end of it. So I think I've got a lot of confidence in the market's expectations of growth going forward. And the only question mark, because we've got a 10 out of 10 chart, is the valuation. Trading at 180 times FY21 earnings, that's a little eye-watering. It does come down to sort of, into the 50s even by FY25. So that's okay. If the growth is there, that PE is going to come down. And it's just up to you as an investor. It's a style issue. Can you stomach that sort of valuation? I can. If you can't, then don't go for it. But I'm going to call this a buy. It's a clear buy for me.
Buy. Do you worry at all about some of these high growth names, given we've got even some dovish members of the Fed acknowledging that their thinking may have to change if inflation remains persistent? So we could, in fact, see interest rates going higher. I mean, didn't dent sentiment with the big tech names through the overnight period, but is that something that you factor into your analysis, Carl?
Yeah, look, absolutely. And that's more important, I think, for the companies where earnings are way, way, way down the track. So look, Wistech, look, yes, their big step up of earnings is coming, but they are earning money now. They've got this 90% of their revenues are recurring, Nadine. So it's just this bread and butter stuff. They've got less than a 1% churn rate. So I've got great confidence in those earnings going forward. Yes, the market may have a higher interest rate to discount those earnings by, but I would counter by saying this one is probably a bit of an inflation hedge because of what they do. So where is that inflation coming from? It's coming from the supply chain. And this is it's their bread and butter. So I think it's a great hedge against that argument. CPU is another one. You talked about bonus buys before. This is another one that will benefit with higher interest rates and higher inflation. So that's another tech company in that space that counters that trend of just blanketing higher rates means lower tech stock prices. It's not always the case.
Got it. Thanks, guys. That's the stock of the day, Wistech Global, but it's not going in the portfolio.